financial documents and tariff systems is our new topic. Now, these documents or these financial documents that we are going to be talking about will range from personal documents of personal financial documents to financial documents for a household, and we will extend that, as we will be seeing in our discussions, we will extend that to the understanding and the discussion of some other related materials and things like costs, income, expenditures, price, and break-even analysis. Now, as it's indicated in the KEPS material, for your grade 12, you will be expected, or at least you will be expected to have learned by the end of the lesson, or possibly the next few lessons, how to specifically be able to make sense of the terminologies used in the various financial documents. So as I indicated, the financial documents that we are going to be talking about will range from personal financial documents like tail slips, that you are given when you buy an item from, from a shop, from Spar, from, ShopRite, from any shop. Each time you pay for something, you're always given what? A tail slip, which is sometimes known as a receipt. And now that is for a personal use. That is a personal financial document. But also a household sometimes receives the same. So as I indicated, these financial documents will range from personal documents to households, then to companies and stuff like that. And you will be expected to make sense of the terms used in the financial document that we will be investigating. You will also be expected to be able, that is by the end of the lesson, to explain, or possibly end of the few lessons which will come, or preferably end of the chapter, to be able to explain or demonstrate how the values in the financial documents can be determined. So you now need to know how to make sense of the terms used in the document, and also how to determine, the values indicated in the financial document. Now, notice that the scope of the financial document relates majorly to businesses and or workplaces, including pay slips, invoices, as we have seen, and invoices, sometimes known as a bill, things like quotations and so on. Some of the documents will contain references to value-added tax, which we will commonly refer to as VAT, or tax and UIF, which are drawn from the overall KEPS material. Now, we will be going through some few definition of terms, just so we can move into a proper understanding. After getting to understand the definition of these terms, the next things we will want to look at is how are these terms applied? I mean, how do we then use these terms that we have? We already know what it means, okay? So the first term that we would like to look at is called basic salary. Now, basic salary refers to the employee's salary, excluding any additional income or deductions, okay? So for example, you would want to think of an employee's salary, like if you have a job that you're doing, your basic salary is going to be that amount of money which you receive when, like, the actual amount of money that you receive notification for. Like you have done some job and, after doing the job, they said, well, we are going to pay you. Then when they pay and you receive a notification, for example, in your message in the phone, the amount of money you have received a notification for is what we call the basic salary. Most of the time, the basic salary comes after all the deductions have been removed. Basically the tax have been removed. things like insurance have been removed and stuffs like that. So when all those deductions are removed from the amount of money that you were supposed to have received, what now remains is called the basic salary. Now, the next thing here is called the gross salary. Now, the gross salary, by definition, is the total of all the income or the income sources of the employee. So the gross salary then refers to the amount of money or the income that you receive. Now, you could be having some salary which was promised to you, but because, you know, you're also helping in some other department within the same company, or because you have been promoted, or because you have some allowance to receive, when all that is added together, when all that money coming in, which we call income, is added together, and no tax is removed, nothing is removed, you just have the full amount of money. Like the rent added there. I mean, like, you know, for some companies, you guys are given rent. Some companies will pay for your rent. And if all those amount of money, or if all those money is added together, then what you get is called the gross salary. That is, you have the money that was promised to you. Then also this time the company decided to pay for your rent. And also they decided that they will pay for your transport. And now they're also paying for your insurance. You know, all that which comes up all together in your account as your income without any tax being removed is called the gross salary. Then now the next time we want to look at is called the what? The taxable income. The income which can be taxed. Okay, so this is the portion of an employee's salary on which tax is calculated. Okay, so the taxable income is this section of your salary on which tax is calculated. It's called the taxable income. And now the next thing is called the deductions. Now the deductions that we normally refer to here, they are like constant deductions for some group of salary, you know, like for a specific amount of salary. Very much like the tax, the UIF, the insurance, you know, those type of deductions. When we put them all together, we refer to them as deduction. So items such as medical aid, pension, for which a payment is required from an employee. So the money is deducted from the employee's salary to pay this item. So this is what we call deductions. Now the next thing here is what we call the net pay, rather the net pay. Now the net pay is the difference between the gross salary and the total deductions. That is what we call the net pay. The difference between the gross salary and the total deduction, and reflects the actual amount of money that the employee will receive at the end of the month. Okay, that is what we call the net pay. Now here is one question which I would like us to go through, just to see how these terms we have been defining are applied. So we are working on an example, possibly a worked example. So in our calculation of a worked example, we want to look at this question here. And the question is that, well, the following is the pay slip of one employee of a company. Use it to answer what? Use it to answer the question that follow. Well, we will be having to answer some questions after what? After checking through this pay slip. So let's go through this pay slip and we see it nicely and what it is in the pay slip. Okay, so this is the pay slip. So there we go. This is Free State Provincial Administration, Department of Education, salary advice. Okay, so here we have pay date 2008, December the 5th. Deposit, institution, account number, branch, gross salary, deductions, then net salary. You see? So all the few terms we looked at previously, some seconds ago, is now appearing here. The net salary, the deductions, the gross salary, then these other terms. Well, we also have here additional descriptions like basic salary given here, housing rental also given here. Well, here we also have additional descriptions, tax, RSA given here. Okay, the amount is here. Then we also have this additional tax. This is GEPF. Then employees. This is 14.0. This is 1407.76. Then there is GEMS. This is very much like medical aid. Then there is employer. This. Then yeah, these other additional information they're also appearing here. Now let's just go straight and we check this question. This is going to be 1.1, okay? So we are supposed to use the payslip which is given for question 1. So in question 1, what do we have? We do have a payslip. And what do we do with this payslip? Well, question 1.1 is going to guide us on what we are going to be requiring to do. That is, how much does the employee earn as a basic salary? Okay, how much does the employee earn as a basic salary? Now remember, we had already seen what it means with what? Basic salary. We said basic salary is this amount of money which you now receive as a notification in your phone when payment is made. Okay, now notice that this amount of money that you receive a notification for comes after a lot of deductions have been made. You know, things like insurance, you already paid, medical aids, you already paid for it, things like tax, you already paid for it, you know, majorly you have paid for everything. So now what you receive in the bank is the amount of money that you can just go and withdraw. That is called the basic salary. Well, are we going to calculate that? No, we are not going to calculate it. It's given, we just have to take the figure. So here we have basic salary. Basic salary equals to 10,829. Okay, so we say basic salary is 10,829. Yes, that is the basic salary. And that is question 1.1. Now, question 1.2 is requiring us to do what? How much does the employee pay in deductions? Well, we have this information here. We don't need to calculate that. We check through and we see where there is deductions. Okay. Oh yeah, there is deduction here. Okay. So deduction have been given. Well, deduction is 2,878.24. So we say deductions equals to what? 2,800 and what? And 78.24. Yes, that is the total of all the deductions. Now, notice that these deductions normally don't include the advance that you will have taken in case something has happened during the month and you have taken some money, like an advance to help you through the process and, you know, like something like that. This type of deduction is not normally for that type of, you know, that type of salary advance. These deductions are mainly the deductions that are like taken from your account and given like to another company. Like for example, when you look at insurance, the money is taken from your account and is taken by the insurance company. Then when you look at medical aid, it's also like that. It's not like this type of money that, you know, you had some problem, an accident, and you had to go to your employer and get some money. It's not always this type of thing, which we call deduction. Deduction is different. Now, in the next question, which is question 1.3, we are supposed to do what? To describe what gross salary is. And we identify gross salary for what? For this employee. Well, what did we say gross salary is? Well, gross salary is the total amount of money without any deduction. Okay? The total amount of money that the employee have been promised without any deduction. Okay? The total amount of money or income that the employee receives without any deduction. Yes, this is what we call gross salary. The next thing we are supposed to do is, after describing it, we are also supposed to do what? To identify what the gross salary is. Well, we come here and we look at the payslip and we want to identify the section where there is what we call gross salary. Now, notice gross salary is here, 11,329. So we say gross salary will be equals to 11,329. Yes, 0.00. Yeah, that is what we have for what? That is what we have for our what? Gross salary. Now, what's the next question then? The next question is question 1.4. Well, the next question in this case is asking for yes. The next question is asking for us to do what? To describe what a net salary is. And then we identify the net salary of the employees. Okay? We have to describe what the net salary is, and we also identify the net salary of the employees. Well, now, what is the net salary? We have already looked at that. There is how much? We did this already. This is question 1.2. How much does the employee pay in deductions? We have already seen that. And is that all? Is there some additional question coming up? Yeah, I thought this question has got some additional part. All right, so there we go. This is what we have got so far. Describe what the gross salary is and identify the gross salary for the what? For the employee. Well, the gross salary, we did that already. Now, describe what net salary is and identify the net salary for this employee. Well, what is going to be our net salary? That's the question. And after that, we would like to find out, okay? We would like to find out some piece of information relative to that. And how do we find out? Well, for the net salary, let's check right away from the payslip. Net salary, payslip. Yeah, we do have the net salary here right away. But also we are supposed to do what? We are supposed to describe it. Well, we say the net salary is the difference between the gross salary and the total deduction. Okay? The net salary is the difference between the what? The difference between the gross salary and the total deduction. So we say net salary is the difference between the gross salary deductions. Yeah, that is what we call the net salary. And what is it here? Well, we look for it from the payslip, then later we just quote the figure as net salary being equal to net salary. Well, net salary is right here. This is 8,400. 8,450. Point what? 0.76. Yes, that is what we have for net salary. All right. Now, when we are done with the net salary, remember always these definitions. Okay, it's very important that you remember the definition. The basic salary is the employee's salary. Okay, the employee's salary, excluding any additional income or deduction. Okay, so the employee's salary, when you don't have any additional income, when you don't have any additional wage, when you don't have any additional allowance, when you don't have anything, the basic income or the basic salary. Okay, it's like you find a company employing a team of workers or employees, then they'll be like, you guys, for example, when you look at a financial institution like a bank, then they'll be like, well, all our tailors, all our cashiers will be receiving like 12,000. Now, out of this 12,000, if you work harder, that is, if you work harder, you will be given like a motivation, or you will be given, well, this is what we call some token of appreciation, normally which occurs in the form of like you go to buy something, then when you buy something, the person who has sold it to you, like when you make an effort and a transaction is done with a customer, and so the service of the company was hired, then the person who was, yeah, it's called commission. So commission does not occur in basic salary. Basic salary is like the fixed amount of money that everyone receives. Now, because you have worked hard and you have got this number of clients, you may be given commission. Commission is not added onto basic salary. Commission stays away. Okay, commission instead forms part of what? Gross salary. Also, when you have some additional payments coming up, you know, basic is like the minimum that you have been promised. And the minimum that you have been promised does not include any additional income or any deduction. But now for gross salary, we talk of all the income or the income sources of the employee. So maybe on top of your basic salary, your employer has told you that, you guys, you know what? When you sell, for example, this item, the commission is this. And now when you sell more, the commission also increases. Those additional income, which will be paid to you because you have worked more, it's now going to form part of gross salary. Now, taxable income is the portion of an employee's salary on which tax is calculated, just like deduction, which is what? Deduction is now this amount of money which is deducted from your account. Then the net pay is now the difference between the gross salary and the total deduction. These terms, they don't mean the same. They have different meanings, and you should get them clearly. That's the reason it is indicated that you have to make sense of the terminologies used in this description. Basic salary is the minimum salary for every company, okay, for that type of position. Should there be a small increment because you are working harder, or you're working extra time, or because your work involves high risks? That amount of money will now push you to gross salary, not basic. And now from gross salary, you move on to taxable income, then later deductions before you can get to net pay. Well, that is on the terminologies used. And this first example was to help us see how this terminology is used can help us in getting questions done. So up to question 1.4, we have now done what? Checked the basic salary, the deductions, and then the what? The gross salary and the figure, also the net salary and the figure. Now, before I get on to this one question, which I would like you to do, there is some additional piece of information. That is, if, for example, we are required to use the values on the pay slip to show how the gross salary for this employee has been determined, then, okay, if we are required to show from the pay slip how the gross salary is determined, let me add it here. Then we can now have gross salary in a bracket. This one was not part of the question, but you need to understand, what if it wasn't given? What if the gross salary was not given, that you would just identify it? You were supposed to do what? You were supposed to add it, go through the steps to add through. Then you would say gross salary, remember gross salary, we will talk of all the income that will be assigned to this employee. And now we will look at this section here where we have this basic salary, okay? The basic salary is like what you have been promised, that we as the company will be paying you this. So this is your basic salary. Then later, maybe you work harder, we can get you commission, you work overtime, we give you more money and stuff like that. That will now give you gross salary. And so this section here, when we add everything, what we get is called gross salary. So according to this payslip, gross salary will be the combination of basic salary and housing finance, rather housing rental. And so we'll be having here basic salary, which we have to add to what? Which we have to add to housing rental. That is, this company also pays for house rent. So we are calling them housing rental. And then from here, we can go ahead to do what? To finish the substitution. So we then say gross salary, okay, gross salary, which is now equals to basic salary plus the other quantities. Let's have it here. Gross salary, basic salary is 10,829. So we write 10,829, okay? 0.00. Now we have to add that to what? To housing finance, in case the gross salary was not given for us. If we are to calculate, this is the process we go through. We add the basic salary plus the what? The housing rental for this pay slip. So the housing rental this time is what? Is 500. Now notice that when we add these two, we can then go ahead to find what? The value which we get from it. And what will it be? Well, this will be, let's get our calculator right away to have this work done. After I've typed this, yes. Let's see what we get from here. 10,829. Then I have got to use the calculator. 10,829 added to what? To 500. do we get there? We get 11,329. So we write it down. So this will be 11,329. This is how we do what? We calculate the gross salary. If we were not given the specific values here and we were supposed to just calculate it, this is what we would go through to calculate the gross salary. Yes, now that is about the gross salary. Well, now what if we were supposed to use the values on the pay slip to show how deductions or the deduction values have been calculated or determined? Okay, now notice that in this question, the deduction values were already calculated for us. But the question is, what if these deductions here were not having a specific value and we were just supposed to do what? We were supposed to add by ourselves. Okay, how would we have got that? Because here it was given. But what if we were supposed to calculate it? Well, if we were supposed to calculate the deductions, we would have to follow some steps. Okay, so let's see how we can get it calculated under this 1.2. So under 1.2, we say deduction will be calculated. I'm putting it in the bracket so that you can see the difference. What is in the bracket was not specifically asked for, but it's important to get to know how to get there. So the deduction could be the tax, which is in this case 1,225, 1,225 point what? 1,225.57. That is 1,225.57. Now we would have to add this deduction to this other description here, GEPF, which is given by 812.17. So it would be 812.17. Well, onto that, we would have to add this amount here, okay, which is just described simply as employees' GEMS. That is what? That is medical aid. So this is 780. So we would have to add onto that 780. Yes. Then onto this 780, what else would we have? Well, we have here employees with this number, members fee. So this is how much? This is 5 Rand. So we would say plus 5.00. Then again, we will want to add, what do we want to add? This 50 here. This 50 here is defined by, well, it's not defined in full, but we see that it's a deduction here of 50 rands. So we'll be having plus 50.00. Then also onto that, we can go ahead and add somewhat, some 5, which is given here as ELRC. This is what? 5 Rand. So we'll be having 5.00. Then onto that, we will finally add this 0.5, which is described as PSCBC. So the next thing for us to add is going to be 0.50. When we add all this, we should be able to get exactly the amount of money that was indicated up as what? As deductions. So let's go ahead in the next step and we see how that can be added. So we say deduction, in this case, will be, right, just create a space here. The deductions will be Well, let's get into the adding section. So just make it big enough so that you can see everything that we need to add. So the first thing that we want to add is 1225 point what? 0.57. 1225. 1225.57. Then we want to add that to 812, that is 812.17. Then we will later add that to 780.00. To that, we want to add 5.00. Then to it, we will add 50.00. And again, we add 5.00. And finally, we will have to be adding what? We'll have to be adding another 5, rather 0.5. Yes. So to this, we now want to add 0.5. What do we get from this? Well, we will be getting 2,878.24. So we'll be putting it here as 2,878.24. Yes, this is how we do what? This is how we add all the what? All the expenses. Rather, all the deductions. Yeah, this is how we get all the deductions. Well, is there something else we can look at which we could have just added things? Well, net salary could have been calculated if it was not given to us. Well, now notice that the net salary that was given to us right here on our payslip. Let's see the net salary. Now notice that the net salary is here, 8,450. Now the net salary comes after what? When we take away all the deductions from our gross salary. And so how would we have calculated net salary? Well, in this next bit here, let me see how I can get to add all this together and we get the net salary. Okay. So the net salary could have been calculated a lot more easily by taking away deductions from what? From gross salary. So we would have gross salary minus deductions. So when we take away deductions from gross salary, what we get is called net salary. Okay. What we get is called net salary. So now the next thing we want to do is to substitute. We want to substitute the value of gross salary and the value of deductions, and we see what we get from it. So let's go ahead and do what? And substitute, so that we get the value of net salary by calculation, not by just identifying it. So there we go. From here, what is our gross salary? Gross salary is 11,329. So we put it here. 11,329, 0.00. Then now the next thing for us is to find the value of what? Is to find the value of deduction. Well, what is the total deduction that we have calculated? Well, the total deduction that we have calculated is 2,878. That is our value of total deductions. So we substitute it here. Where there is deduction, we now put the what? The value of deductions. So when we do this, in the next step, we then get the what? the calculated value of net salary. And what is that going to be? Well, the calculated value of net salary is now going to become, all right, let's put it here. The calculated value will be sorted out when we get the difference. And then that means we have to use our calculator. So we will be having 11,329, okay, 0.00 minus 2,878.24. And when we do that, what we get is the net salary, which is what? 8,000. That is 8,450.76. So yes, this is how the net salary is calculated. Now, at least we have seen how net salary is calculated, how gross salary is calculated, how the deductions are calculated. So should it happen one time that you are required to calculate net salary, remember always that you must have gross salary and from it you take away all deductions. If it's required that you calculate gross salary, then you remember that all the deductions, rather all the income must be added to the basic salary so that you get what is called the gross salary. Then now, should it happen that you are required to add or to calculate the deductions, you just make sure all the deductions which will appear on the pay slip is added. And the good thing is it normally appears on the same line. So it's easy to see because you may not be knowing all these terms, but at least there is one or two that you will understand what it means. For example, tax is not something which is added onto someone's salary. Tax is something which is taken away from someone's salary. So that obviously forms parts of deduction, and therefore everything else coming after tax becomes a deduction. So when all is added, you get the total of the deduction. And so that should lead us into the next bit of discussion, which will lead me to leave you with this second question for assignment. But the things that I would like you now to get to understand a little bit more precisely is the element of, the small concept of selling price, cost price, the break even and income and things like that, okay? Things like quantity, things like, all right, so in a very precise way, a receipt provides proof that a customer has paid for an item or for a service, and it gives a summary of the costs for buying the item or service. An invoice has got the same meaning as a bill, okay? An invoice provides a summary of all the costs that a customer must pay because they have chosen to buy some item or service. And a quotation provides a guideline of all the costs that a customer will pay or will have to pay if they choose to buy an item. Now, this thing is called selling price. It's normally common in the context of someone who is in business. So in the question which comes immediately, that is your assignment now, this question is talking about a business run by someone, and terms like selling price will help you if you understand well to deal with some of these. So selling price is the price that a businessman charges on the product he has made. That is called selling price. The price for selling an item, selling price. There is also what we call the cost price. The cost price is the price, or rather is the cost that the businessman has incurred in making a product or making goods and services, okay? So when you buy something and you want to sell it, if you are doing business, when you buy something, that is called cost price. When you sell it, that is called selling price. That is if you're in business like that. There are things like fixed costs also. Fixed costs mainly refers to things like the cost for rent, which normally does not easily change. You know, if it's 10,000, it's 10,000. And those are the few terms that will help you to go through this question. So this is question 2, which you will go through and do it. Then as you do it, you will also meet terms like expenditure or income. Expenditure purely means the money you spend. You know, maybe in rent, paying rent, maybe in paying salary for your workers, maybe in paying electricity, like that. Generally, what you use money to do in the business can very much be classified as expenditure. Then income is the money which comes in mainly after selling the product. Then there is also what we call the break-even point. That point when the cost you incur is now equal to the income which you get after selling the product. So please go ahead and do question what? Do question 2 from part 2.1 up to part 2.3.5. And when you are done with it, just submit. The next video will also be an explanation of this assignment. So please make sure before you get the video with you for the correction, at least you have done this, and you will be able to see where you went right and where you went wrong in case something did not work out right for you.